Hello, what's up you guys? It's Jeff Benson right here. Super excited to bring you a brand new video every new day and every new week, every month, all right? So in today's video, I'm just going to be going over the request that I got in the previous one. So here are the requests. They want me to make video on Fibonacci retracement, how I use Fibonacci retracement to trade. And I'm also going to be showing you the trades that I'm currently looking at and how I'm getting in on all of these trades. So I'm currently in my trading room. Yeah, I've got some visitors, so I'm going to be going downstairs right now to stay with them. But I'm not going to be showing their face because of privacy, okay? Because I don't want to show in this video. All right, so I'm just going to be going downstairs. I'll be showing you guys what I currently have on my laptop. You notice my laptop is not here. It's because it's downstairs. I just came in here to just do the intro. And I just want to mention, I watched this Netflix video that is really everywhere, Tinder swindler. Like, you guys had better be very careful, right? Then this is what I mean. You don't have to be doing all of these scammy things when Forex can actually fund all this your luxury lifestyle. So just learn how to earn. Once you learn how to earn, trust me, there'll be no need for robbing Peter to pay Paul. I mean, it's very uncalled for. So guys, I recommend that video. Go watch it if you've not seen it before. It happens every now and then. It happens every day. It's a common thing these days. So just be very careful and not be their victim. All right? So see you guys in no time. So currently, with my PC right now, I'm about to show you guys what I currently have on my PC. So I'm trading GBP USD and I'm still trading on my funded account, and also we're also flipping account. We have a lot of people here trading their personal accounts and they are catching the entries. So the first entry that we got was this in the morning. We call this one first thing early in the morning. From on here, anytime you see this gray button, sorry, this gray bar, that means that's my entry point. So we caught this entry up onto this extent, so we hopped out. And upon this retracement, now we also hopped on again. Let me show you where our entries are currently and what I saw before I started getting in on this trade. So look at my entries here. So the stop is somewhere here. You can see the stop loss. So it's time for me to start tightening the stop loss. Okay, let me just show you real quick. So this is $4,500 I'm making. That's $4,500 on this trade. So everything is pretty much conservative. I'm not going too aggressive on this account. So let me take in one more order right here, showing 10 standard, but I'm just going to go with 4 standard conservatively. 4 standard, because already, what I'm saying conservative, you already see the account balance, it's huge. So I'm just going to go in and I'll click on buy. So I'll modify the stop loss a lot more later, not on the camera. I'll do that because I'm filming with this other hand. I will not be able to do that just right now. Okay, I'll modify the stop losses. I'm going to tighten it so that we can have almost risk-free trade today. All right, so let me break this trade down to you. So what did I see? Why did I go short? I'm sorry, why did I go long? Okay, and here's it. You would already notice this on the 15 minutes time frame. The basic way I trade is I look at my main trend from 4-hour time frame. So checking from 4-hour time frame, you find out that we have been in a downtrend, but right now trend is about to change to the upside. Like here, it's coming from this bottom to up. Right now, price broke to the downside, and now we are moving up. So this is a first retracement. This retracement should go up at least to touch this trend line before we start dropping. So that's what we are aiming. Most likely, it's might bust this trend line and keep going. So what we do, we don't predict down what price will do. Like, we don't act down. Instead, we wait for price to act, then we react. All right. So we're waiting for price to either touch here, then we see if it breaks it, we buy. If it bounces, we sell. That's how we're gonna do it. So without further ado, let me just talk a lot more on the Fibonacci retracement thing. First, ways to know how to draw Fibonacci retracement. I'm going to merge this topic with what I saw today that made me to go long. Okay, I'm going to put them all together. So first, I'm going to go on 1-hour time frame. It works on all time frame. In my Fibonacci retracement works on all time frame. So also note that Fibonacci retracement has 2 major principles that you should always remember. It has to be coming from your left hand side to your right hand side. It's always coming from this side to this side. All right. If it's for a buy, yeah, you have to note the recent high or the recent low. And it's for a sell, you have to note the recent low and the recent high. Let me explain what that simply means. And also, it has to be in a trending market. Do not use it in a market that is consolidating. It would not work. It only works in a downtrend or in an uptrend. That's why it's called Fibonacci retracement. This is just the idea behind it. Just imagine price is moving up, yeah. After it moves, what happens? It stops, it retraces like this. It's going to retrace should have a slight retracement like from here. Slight retracement. It moves up again. Yeah. This is the idea of Fibonacci. So what you want to do with the Fibonacci is how long, like how much would this move down, yeah, before it starts going up. That's what you want to use Fibonacci to check. All right. You want to be able to catch the impulsive move. Like this one right here is an impulsive move. This is an impulsive move. This one right here is an impulsive move. This is a corrective move here. All right. You want to catch impulsive move. This is a corrective move. So your point is, how do I know when it will stop correcting and start the impulsive move? Because impulsive move is what gives big money. Like impulsive move. Here's an example of impulsive move on chart. Like here's an impulsive move does not have pattern. Like here's an impulsive move, like straight down, does not have pattern. Why correction have pattern? Like here, something like this is a corrective move. This has pattern. You can have flag pattern inside. I don't want to go through the patterns, but I just want you to know difference between impulsive move and corrective move. These are the two differences. So what you want to do with the Fibonacci is, okay, can you tell me, Fibonacci, can you tell me when this retracement will stop and will start going up, because I want to catch the impulsive move. That's the function of Fibonacci retracement. All right. So how to draw a Fibonacci retracement is, you are going to take out these two. You have to look for it here. Click this button, this icon right here. Click here, and you click on Fib retracement. So once you hit on this button, then you should have already picked this one. Then remember, it's always moving from the left hand side to the right hand side, left hand side to right hand side. So you have to pick the recent low and the recent high. Recent low, recent high for a buy. For a sell, you have to pick the recent high and the recent low. All right. So we want to get this one. So we're going to start from here. Take a Fibonacci right here. Make sure it touches the recent high. This is the recent low. This is the recent high. Then we'll spread it in the future, like we spread it to our right hand side. Then we click drop. So it drops. Here are the points you should be focusing on and paying attention to. So you want to pay close attention to 618. That's the golden ratio, 618. You have to pay close attention to 50. You have to pay attention to 38.2. But most likely, I love 50 and 618. These days I'm fond of 0.7862, 786. This one also holds. So I basically just delete 0.38. I don't use it. All right. So now let's go and put it into chart, practical one. Now let's go. Let's get that done. First, let me get rid of all of these drawings that is just all over the chart. So that would be pretty hard to do. I'll just leave the drawing and focus more on the chart. So now let's look for where. Now here's a very good example. Here is an impulsive move. Here's a correction. Impulse. Here's a correction. You would agree with me. Okay. We've got an impulse right here. It's a correction right here. So what we're going to do, this is the recent high, while this is the recent low. So let's pick a Fibonacci. So I came here to pick it on my favorite tool. Then I'm going to go to the recent high. This is the recent high. This is the recent low. All right. I'm just going to spread that across. So we are going to be waiting for action at 50 or 618. So where did price get to? So price got to 50, then it started coming down. So that's how you make use of Fibonacci retracement tool. So let's do another one. This is an impulsive move. This is a corrective move here. Here is another impulsive one. This is a corrective move. Remember, impulse do not have pattern, while corrective move has pattern. Like it makes noise. Like this is a corrective move because it's making noise. It makes noise. Like this is a low. You can draw a flag pattern and all of that. So let's go ahead and spot another one again. This is a recent high. So I'm going to draw from recent high to a low right here, recent low, and see where it got to. So this one obviously got to 38.2. So it got to 38.2, and it's not. You don't just hop in. You don't just hop on because okay, got 38.2. Let me get in, or 50. Let me get in, or 61. Let me get no. There have to be other conferences that you have to add with this. This should not be used as a standalone principle. So I'm only showing you how I use the Fibonacci retracement to know where price will likely reverse plus chart pattern. So at that point, when price gets to this point, what do I start looking out for? Then I pay close attention because that's my area of interest. Okay, what's going to happen right here? What patterns are happening? What candlestick rejection are printing? And all of these things. So that's why I just start looking at. Okay, like the one I made mention of yesterday, the only thing I saw there was price getting to 618. Okay, price getting to 618, and it got to 618, then bang, price drop. Like here was a 618 movement for here. All right, so that's what we mean by Fibonacci retracement. So that's it. So on today's trade, I'm still holding on 15 minutes time frame. That's where I do my entry. Everything is pretty messy right now. Let me try to get rid of this drawing. I'll do that maybe off camera. But for today's trade, I'm anticipating more push to the upside. Since I've got my entries right here, so I'm anticipating that price would get to somewhere here. I have entries. And my stop loss was initially here because I love to set 20 pip stop losses. 20 pip from the recent low. I have to make sure it's a little bit below the recent low if I'm buying. All right, so now the stop loss, the take profit should be somewhere far than this because I'm expecting more pushes to the upside. Should be somewhere far. Okay, but at least we must get to this next psychological level, which is 1.36, 1.360000. Okay, so that's it. See you guys in no time.